Hi everybody, Marco Carvalho here from businesscreditbuilders.org. Today's video, we're going to talk about how to get business funding with bad credit. If you're a business owner, you have revenues coming in through your business and you have bad credit, you're getting turned down from traditional lenders, this is the video for you. You may also be in a position where you don't have any revenues going through your business and you have bad personal credit. What can you do? We have an option for you. So in this video, we're going to share with you our top 3 options to overcome bad credit if you're looking to acquire business funding for your company. So let's get started. Now, if you're not sure where your credit scores are at, what your credit reports look like, that's the first thing I recommend you do. You should pull your credit. Now, you can get one free credit report a year from annualcreditreport.com, but that does not provide you your actual credit scores. So you can check out knowmycredit.org. That's our special partner we have with Score IQ, where you can get all 3 credit reports and FICO scores for only $1 for 7 days. They do have a monthly subscription after that if you want it. It's very important to monitor your credit and know where your credit scores are at. What's considered poor credit? You can even be in the fair credit range of 580 to 669, but most traditional lenders may consider that less than perfect credit. In this video, we're going to address for those of you who are under the 650 credit score range on your credit bureaus. Because typically you may have a hard time getting approved for a loan or a line of credit or funding from a traditional bank or credit union. So what can you do? Let's get started with the first option is if you have revenues and you have bad credit. Well, one way to overcome worrying about your credit report is to deal with a lender that doesn't even check your personal credit. So what I call them is no credit check lenders. And they're very few out there. We did a video on this particular lender a couple weeks ago where they provide funding up to $50,000 and they do absolutely no credit check. So let's talk about this one. They have no credit check. They don't pull a soft pull at all. They don't even care about your credit score. They're going to look at your revenue only. Now, the great thing about this, you're probably thinking, oh, do I need to be doing $20,000, $30,000 a month in revenue? What if I'm doing very little revenue? Well, there's no paperwork, flexible terms. The best thing about this is you only have to be doing $2,100 a month in revenue. That's their minimum requirement. I'm going to talk about details in a second, so don't go yet. But we actually have a special link for them. Fundingfast.org is our link. And with anyone that goes to our specific page with this lender, they're waiving the $300 processing fee. So there's no origination fees, there's no processing fees if you get approved for a funding offer. What are the qualifications? You have to be at least 6 months in business with this lender, and you have to be doing $2,100 a month in revenue minimum. And that across the board is the lowest requirement out there that I've seen to get a no credit check loan for your business. Now, they do want you to have some activity in deposits though, so you have to have at least 4 deposits a month coming into your business bank account. Okay, so 6 months in business, at least $2,100 a month in revenue, and 4 deposits per month coming in. Other things they look at, of course, is how much you have in your balance, your NSF history. So those are things that could maybe trigger a denial if you're going have non-sufficient funds, too many of them, or you have a negative balance, etc. But if you go to fundingfast.org, that's going to take you to our specific page here that we have with Loot. That's the name of this lender. Really simple. You'll see my mug up there on this landing page, but this is a specific opportunity we have for those of you who are going to our link. They're going to waive their processing fees. So you use that link, fundingfast.org, and you apply. You just click here to apply now. They're not going to check your credit at all. So this is one opportunity for you to apply for a loan for your business. So it's really, really simple. You go to fundingfast.org. What they're going to do is they're going to want you to connect your bank account securely using Plate. This is read-only access, and this allows them to look at all the data on your business bank account as far as the number of deposits coming in, how much in deposits you're getting for your business. And what happens then is they present to you an offer for funding. Okay, at that point, you can decide if you want to accept the offer. The funds are deposited literally within a day. All right, so that's one option for you to get business funding with bad credit, because this particular lender does not check your credit whatsoever. Let's talk about number 2 is Fintech Lenders. Now, what I like about Fintech Lenders is they're using other underwriting criteria that most traditional banks and credit unions are not looking at. They're overlooking some of the traditional things like your credit score. As an owner, they're looking more at like bank revenues, your deposit history. They're looking at your business credit, or they may be looking at your social networks, etc. So there's different data they're looking at, which is exciting. The majority of fintech lenders out there offer up to $250,000 or more in funding for businesses that have revenue but have less than perfect credit. Okay, so I'm going to share with you a couple of these fintech lenders right now, what the credit score requirements are, what the revenue requirements are, and then I'm also going to share with you an option for you to get the best offer possible with all the different types of fintech lenders that are out there. So if you're a business owner, you have revenue, but you're going through some challenged credit, there's hope for you, okay? So don't get discouraged. Now remember this though, because you have less than perfect credit, what these lenders do, these fintech lenders, is they're going to make you pay for it. They're going to charge you a higher rate for the money that they lend to you because of your less than perfect credit. That's why if you have great personal credit and you have good revenues, banks give you the best interest rates. They give you the best terms. Okay, so just remember that when we're talking about this is there's a trade-off here. When you have bad credit, expect to pay more money for funding. With fintech lenders, they overlook your bad credit. That's based primarily on revenue is what they're looking at. Now, those you may be saying, I don't have strong revenues right now. That's okay. I gave you one option here, number one. And number three, the third option we're going to share with you is how to overcome if you have no revenue but bad credit. How can you get funding? The fintech lenders have a really simple application. There's no docs that you don't have to provide, no tax returns, and no prepayment penalties, which is exciting. Same day funds. Now, and I'm not talking about all fintech lenders, but this is the majority of them. They have no prepayment penalties. So let's talk about some of them right now. First one you hear about is Fundbox. They have a minimum credit score of 600. Time in business 6 months, and you have to be doing at least $100,000 in revenue. So that's the requirements to even apply for a Fundbox loan. So this is one option. Then you may have heard of Bluevine. Bluevine, they have a 625 credit score. Time in business, you have to be at least 24 months in business and doing an annual revenue of $100,000. So a lot of these, you're going to see a lot of consistency here with a lot of these fintech lenders want you to at least be doing $100,000 a year in revenue. On Deck, that's another popular fintech lender, 625 credit score, only 12 months in business, same thing, annual revenue 100K. There's Fora Financial. This is a little lower credit score requirement of 500, 6 months in business, but you got a 500 credit score, they want you to be doing more revenue. They want you to be doing at least $15,000 a month in revenue, which is more than the other ones. And then you have Axion, which is a really exciting opportunity for minorities. They have minimum 570 credit score, 12 months of business. That's who they mainly cater to. Annual revenue only $50,000 with the Axion Opportunity Fund. So that's an opportunity for those of you who have challenged credit, but you have some revenues. There's an opportunity for you to get funding. Then there's Funding Circle, minimum 650 credit score, time in business 24 months, and your annual revenue has to be $75,000. These are just some of the major players out there, and I know there's more of them out there. One thing I do want to talk about here is you may have revenue and you're probably thinking, well, what about this is loans and this is funding? What about a credit card? Can I get a credit card with bad personal credit? If you have revenues, yes. I mean, we did a video, watch this video right here on how to get a business credit card with bad personal credit. So you want to check this video right here. That's just one option. There's plenty of options. You can get a secured business credit card. There's many fintech cards out there that allow you to have a low credit score, but they'll check your business credit or to look primarily at your business data. So there are fintech cards out there. I'm talking about funding with this particular example. One option though, like what if there's so many fintech lenders out there and what if you don't meet the requirements? What if are you getting the best offer? Are you getting the best terms? One way to overcome that is dealing with Rock Financial. This is a relationship that we have with them. You have to be doing 6 months in business, a minimum $5,000 monthly revenue. And what they'll do with all the lenders out there is get you the best offer across the board with the fintech lenders. So they only present to you 1 to 2 offers. This is a way for you to make sure you're getting the best possible offer. And you're going to go to bankbusinessline.com. Now, what it's going to look like here is this is the form. This is the page that we have set up with Rock Financial. And you fill out this form here, and then right from there, when you click apply now, they're going to give you an option to complete the application and upload your bank statements. If you don't do that at that time, they're still going to require that. So you're going to have an advisor get a hold of you, and they're going to need you to complete an application and provide 6 months of bank statements. So I suggest for you to provide that right there when you fill out the form. That way it just allows you to get an offer that much quicker. So this is option number 2. I gave you a couple fintech lender options there, a way to make sure you're getting the best offer across the board with Rock Financial. With you, another option to get funding if you have bad personal credit is using a credit partner. Now this is a very unique strategy because you may hear the term co-signer, but this is actually a credit partner. This is someone coming aboard to literally co-sign for your business. They're basically leveraging their good personal credit to secure funding, credit card funding for your business. Now, you heard me talk about business credit card funding, where we acquire 4 to 5 business credit cards with 0% APR on financing up to 18 months. This is a done-for-you service that we offer, and with our service, we accept credit partners. Now, the beauty of that is you retain full ownership and control of your company. You're not giving up your company to someone who comes aboard as a credit partner. You're bringing the credit partner. We're not providing you a credit partner. But let's say you have a family member or friend that wants to help you secure funding. They believe in your company. So they're co-signing. They want to use their personal credit to secure credit cards for your business. So they are going to be the personal guarantor, though. So there's recourse for them by co-signing. So there's a risk for them. So they have to really believe in your business. And you may offer them equity or ownership or some type of benefit by co-signing for your business, but it's something you can do without doing that, is my point. You can retain full equity if you want, and we've seen that happen plenty of times. So who could be a credit partner? It could be a business partner that you have. It could be an investor that comes to the table and says, let's get some business funding for your business right now. I'll co-sign. That way you can scale. That way you can get the inventory you need, etc. But the investor could be your spouse who has better credit than you. Let's say you have challenged credit, but your spouse has great credit. They could be used as a credit partner, or even a family member or a friend. So a credit partner is someone who's basically willing to use their credit in order for your business to acquire business credit cards. It's really simple. It's the same process that you would go through if you had good personal credit. They're going to pre-qualify by going to businesscreditbuilders.org. Now, the way the credit card funding program works, you've heard me talk about this before, we get up to $175,000 in unsecured business credit cards for your entity. In a credit partner situation, it's the same process, same everything. The only difference is their credit report is being used to qualify for your company to get business credit cards. Same process they get. We like to see 680 or higher FICO scores on your credit partner's credit report. It does not report to their personal credit. So if you have someone like a family member or a spouse who's like, well, I don't want to use my credit. All that credit card debt that you have on the business for these credit cards are going to show up on my personal credit. It doesn't. The credit cards we acquire only report to the business credit reporting agencies. So this protects their personal credit. They will get the inquiry on each of the banks when they get approved for the business credit cards, but that's it. It's just the inquiry. Build business credit. This will help your company scale. This is no doc funding program. So for those of you who have little to no revenues as a business, you have no tax returns, nothing, this is a great program. You just bring on a credit partner and the funding period is fast. It's 14 to 20 days. We acquire that funding for you. So very simple. You go to businesscreditbuilders.org. This is our website. And you're just going to click on this tab right here which says pre-qualify now. And that's going to bring up this pre-qualification form. Now you're going to put your credit partner's name on here. They can even fill this out. Age of business, and you're going to upload the credit report where it says right here, upload your credit report. If you don't have it, you can order. Here's the link to Know My Credit. Now, what I want you to do, though, if you're using a credit partner, in the comments section right here, you want to type in your name because you're the owner of the business and say, my name is so-and-so, this is my credit partner, and put your contact details in the comment section as well, because we're going to contact you and your credit partner and do a call to go over the projections, the results of the review, what the role is being a credit partner, that they're a guarantor, etc. And then, of course, you might be asking, well, do they have to be an owner of my business? Do I have to give up ownership? No. With a credit partner, there is a way for you to retain full ownership like I talked about in the video. You just have to show a connection to them in your business. So that's a very simple process. You go on the state filing records for your company, and you can add them as a treasurer or an officer of the company. As long as you do that particular step, and that's very simple, we can show you how to do that, then we can proceed forward with business credit card funding. I would not suggest doing that yet. Wait till you get a pre-qualification. Wait till you get a funding projection. And of course, wait till your credit partner agrees and wants to move forward. If they do, then we send the funding agreement to your credit partner. We need the company docs, the articles of incorporation, EIN, driver's license of your credit partner, and then we start the process. So that's how simple it is. So I just provided to you 3 ways for you to get business funding with bad credit. We had obviously a no credit check lender. We have the Fintech Lenders, and we had a way for you to make sure you get the best offer. And I shared with you using a credit partner for business credit card funding. So this is 3 ways for you to get business funding with bad credit. If you found this helpful, give us a thumbs up, subscribe to our YouTube channel, and you might want to check out our website, businesscreditbuilders.org. We have many funding products done for you funding, and we have our business credit building system. So if you're looking to build business credit, you want to learn how to do it, check out our system. That's a great product for you to learn about maximizing your funding ability as a business. So with that, make it a great day, and we'll talk to you real soon.